Hello, everyone, and welcome to ChartWise Women with Erin Swenlin and Mary Ellen McGonagle. Welcome to our Thursday, September 3rd show. Well, the market has taken a turn for the worse today, and interestingly, Mary Ellen and I had already
Yeah.
decided to talk about exits and stops. So maybe it came
Yes.
a day too late, Mary Ellen. I don't know.
I
How
don't
are
think
you
it's
handling it?
I don't think it's ever too late to talk about exit strategies and how to plan your whether you're going to take profits or if you're in it for the longer term. And so my MEM Edge report, I do make that distinction that if you are a shorter term trader, you may want to take this action. Longer term, hang in there. Use that weekly, that monthly chart. Those winning stocks that we've identified are going to be winners for a while.
Yes, yes. Well,
Oh,
it's going to be really interesting. We have a lot to cover, so I think we'll just get started. But yes, I have a lot of questions in my trading room. I do it for free on Mondays with Decision Point. And one of the key questions always is about when is the party over? When should I get out? How do I get out? I can buy. It's really, and I have to admit, buying is pretty darn easy.
mm-hmm.
And selling is very difficult. When do you take those profits? When do you hang in there? And part of that is learning about stops. But I think it might be best first to talk about how you can spot these declines when they come along. Is this a correction? Is this going to be a while? So let's look a little bit on that to see what we got here. Well, of course, wisdom of the week. Mine is right up front there. Stops are a necessary evil. They're honestly, I can't think of a better way to preserve profit than to use stops. But they don't feel good a lot of times. So I consider them a necessary evil.
Yeah, and I always say this in every single course that I offer, any presentation, that having an exit plan is such a critical component, because if you do not and your losses do add up, it's really going to chisel away at your confidence, and that's a necessary ingredient in order to be successful. So just have that plan in place. We're going to share with you today some examples and some tools that you can use, and really it's going to set you apart. It's going to make really all the difference. And yeah, so
Absolutely. So we'll give you our thoughts on stops and that sort of thing. But I think right up front, Mary Ellen, you came up with
mm-hmm.
this slide, so I'm going to let you talk to it.
Yeah, so those of you not familiar, I spent 15 years at William O'Neill and Company, the founder of Investors Business Daily, working with top money managers. And this system that I'm sharing with you was put in place by Bill O'Neill and his team, and it's based on historical precedent. So it is fact based. So I'm just going to share with you quickly. We're not quite at this point now with the markets, but just in general, how you can spot major market tops. So you're in an uptrend, everything is working just fine. How can you tell if there's been a shift? And that shift can be either a pullback, a pause, or a bear market. But here are the characteristics, and I'll share an example with you as well. First off, you're going to pay attention to days that the market drops more than 0.2%, and it does so on volume that is higher than the prior session. So that's your first criteria. This is called a distribution day. And what you want to do is just keep a calendar, keep marking this up, because 4 or 5 distribution days over a several week period is telling you that there's been a shift in sentiment from bullish to either cautious, or in some cases even more. It could be more than just a pullback. I'm just going to share a very quick example here, taking us back to 2010 when we did have this significant pullback here. So here we are in April of 2010, and I've just quite simply highlighted those days when the markets were down 0.2% or more, and take a look. The volume on that down day was higher than the prior day. So we did have these 4 times clustered together within a 3-week period. And so we went from a confirmed uptrend to, at the very least, a pullback, and it did wind up being quite a bit more. But these signals, and you can marry that with others where the RSI is trending downward, your MACD has that negative crossover, but ultimately it is going to be these distribution days that are really going to be your guide. So that's what you're going to be on the prowl for.
Excellent. And I'm going to look at what are you thinking today then? Because we already are looking at volume. We haven't even gotten halfway through the trading day, have we? And we're already seeing higher volume than yesterday, I believe.
Absolutely, yes. So that would be one distribution day. You'd have to go back and see, because we've been in such a bull market phase that we really have not had, I think we only have one distribution day. This is a current daily chart of the NASDAQ, and this was taking us back to last week, just a touch above on the volume, and the markets were down. So this would be 2 distribution days, and now you can begin that count and be on alert, because if we do continue to see down days over 0.2% on higher volume, we could be in for a little shift here.
Oh my goodness. Okay,
Yeah.
well, we'll have to keep an eye out. I know with my studies and our indicators, yesterday I was looking at the indicators telling me it was a buying exhaustion. And it's really hard to tell everybody to be bearish after a day like we saw yesterday. But when you get those really big spikes in your net advanced declines and various things like that, that can be a warning sign. And that's what I was seeing yesterday. Although I have to admit, my indicators have been calling for this, well, far too long, because the market has just continued to go higher. So, paying attention, there you go. RSI right there is really overbought.
Very overbought. I actually was seeing the same thing yesterday on the weekly, where the RSI did get overbought. And on the S&P, the close yesterday, it was 8.8% above its 50-day moving average. And you'd have to go back historically. It's not unprecedented. June 6th, the week of June 6th, it was up 11% above that 50-day, but clearly stretched and certainly due, at the very least, a pause.
Right, exactly. I think the wall of worry might be finally crumbling a little bit.
Too many bulls in the China shop.
Yep, exactly. Well, let's go ahead and before we go on break, let's talk about what a stop loss is and some of the advantages and disadvantages, because these are one of the best ways to protect yourself when you can't just be right there at the terminal, determining when to pop and sell. So these are good ways to give you an idea of what to do. So let's look at some of the stop losses. So first of all, it's basically an order that you place to sell a stock when it reaches a certain price. Easy, right? They're designed to limit your losses, and they can be done based on percentages or on a dollar amount. Trailing stops are great because they do follow you all the way up. And that way, when it does make the turn, your stop is a bit higher than maybe where it would have been placed when you did your order. However, let's move on to some advantages and disadvantages. So first, the advantages, like I said, you don't have to be sitting at the terminal. You can have your hands off the wheel. They're really great before vacation, or you're going to go for time away. You don't have to sell everything. It's just a way to kind of protect your profits or prevent serious losses. So, and on days like this, if you have the wrong stock and you haven't set the stop, and admittedly, I have one that's sitting in my account that I'm just mad at myself because I set stops on everything and somehow I missed that one. So
It's always
no
that
fun.
one.
It's always the one.
It's there to teach you a lesson.
Exactly. We learn them every single day, don't we?
Oh, yes, we do.
So the disadvantages, because I know a lot of people who use them, like I said, it's a necessary evil, but the problem is a lot of times you can get stopped out early. And that's one of the reasons that I say in that bullet right under it, is that you need to note the stock volatility. For example, I presented a diamond yesterday that I basically said, unless you need to be a short-term trader, you need to be prepared for a lot of volatility. And, so that's going to affect what kind of stop loss you have. I mean, if it's a stock that will bounce, 5, 6, 7% in a day, a 5% stop loss, you're going to get caught every time.
Mm-hmm.
And then just with market orders, you need to be aware that even though you have that stop loss, sometimes you're not going to get it at that price that you set your stop loss for on a day like
Yeah, it
today,
might
even.
blow right past it, and unfortunately
Exactly.
on the
And
open.
yeah, and that means, those price shocks can still sometimes hurt you. I mean, I think Apple's down 8%.
Mm-hmm.
So if you don't have a stop loss, you're looking at that particular holding and probably, having a freak out right now. But we'll talk about Apple, actually. It's one of my
Yeah. And
examples.
then do you have a percent for your stop loss that you advise? I can
Yeah, well,
share.
typically I have a different uh, amounts, of course, based on whether I have a profit, whether I'm just getting in. So typically when I just get in, I'm looking for that major support level that if it drops below that support level, forget it, I don't want it anymore. So I'll look for that when I buy in. And that usually, it can be anywhere between 5 and 9, 10%. I try to zero in on that 7 to 8% area if I
Mm-hmm.
can.
Mm-hmm.
But when I first get in, I want to set that hard stop. But as I start to move up, of course, you hope so, and I start getting that profit building, then I need to move my stop and be paying attention to that.
Mm-hmm.
And like I said, that's when, if you're in a market where I've been looking for a drop like this, a pullback or correction now for ever. And so when I started to get that feeling back in mid-August when we looked like we were really topping out, that's when I would set those trailing stops and I tightened my percentages because I still wanted to be open.
Participate. Yeah.
Yeah,
Mm-hmm.
which I'm glad I did, right? Because the
Mm.
market went straight back
Oof.
up. And so
Absolutely.
now
Yeah.
those stops that were trailing are starting to click in today, which is
Mm-hmm.
fine for me. I can always
Mm-hmm.
get back in. So what about
Very good.
yours?
Yeah, I do tend to advise about an 8%, 6 to 8, depending on risk tolerance. And any tighter, you're just going to get whipped around. You're going to get stopped out. It's just going to be a frustrating exercise. And so that is generally what I advise. I can share my screen
Yeah.
quickly because I also look at, you mentioned levels, so I'll just share an example. This is a smaller stock, but it certainly presents the case. This is GNMK, a smaller biotech. But you'll have these stocks move up and they will pull back. For me, it's this 50-day simple moving average that is the what I call line in the sand. So we had this nice orderly pullback to the 50-day, and the stock did it. Reverse that downtrend. But more recently, this was not on my list. It's one that I follow for a client of mine. And so once it breaks below this red 50-day simple moving average on volume, then it's time to exit. And then from there, you'll get these follow and add on negatives where the shorter term moving average crosses over the longer term. You've already had a negative RSI and now the negative MACD in line with that price break. So just thought I would share that as an example.
Absolutely. All right. Well, I think this is a great time to go to our break, and we'll come back with more examples of how we set stops. All right, we are back from our break, and we wanted to share with you some of our examples for setting stops because we can talk about it, but I think it's a lot more clear when you look at these actual examples. So you had a great example up there, Mary Ellen.
Yeah.
I think I want to share Apple because I know that's one of the ones that people have been concerned about. How long can it go up? And to be honest, my dad, Carl Swenlin, and I have been, a bit concerned, about Apple because it has been making this big move to the upside. But it also had that split earlier on Monday, I think is when it went into effect. And one of the phenomena that we were watching, especially on Apple, was that typically they've done a split a few times. And after the split, it'll go up for a little while and then it'll go down, it'll correct even to, 10, 15, 20%. So looks like we're starting to get ready to do that with this big giant downtrend. However, okay, everything's looking negative, but the RSI is still positive. Momentum has shifted, but boy, wouldn't you expect it to. Right now, that 20-day EMA is where it's sitting right on top of it. And, looking at the character, personality of Apple, that 20-day can be a problem if you get below it, but the 50 days you were talking about is that line in the sand.
Mm-hmm.
And if I do an inspect tool here, if you do that, and you go to the spot you want and you hold it down, we can see how far down that would be to the 50, about. That's another 10%. Of course, the 50 is going to rise before maybe it will get to it, but that's telling you, okay, that is, I think you're right, that would be your line in the sand, would be that 50-day EMA. If you're a short-term trader, like a lot of my positions are, then maybe this is a time to take that pause and get out while you watch it go down to that 50. Because, Apple has been ready for a pullback for a while. And I think after that split, it could be a problem. But just off of today's action, it doesn't look that bad. And I was looking at Tesla and yeah, it's an 8% down move here. But again, it hasn't dropped below that 20. So I don't think it's all over for everything. It's just right
Mm-hmm.
now, I think it's just something that, we have to endure. Stocks can't go up every single day.
Yeah, you're absolutely right. I was going to share because there is that concept of climax tops,
Mm-hmm.
and I'm sure you're familiar with that terminology. I'm just going to share this PDF that is available publicly that definitely would make sense to take a few minutes. Again, it's all very fact-based. This is, again, from Bill O'Neill, and it's a PDF. He actually signs it at the bottom and gives a really great example. So one, there are a couple of characteristics. Again, just take a minute, take some notes. The stock is up 7 out of 8 days. Up 18 weeks or more. In another rule is 25 to 50% over a 1 to 3 week period. So a lot of those characteristics do hit Apple, but one thing that stuck out in my mind is when these stocks have these climax tops, it's called excessive, but when they start having the stock splits, that is something that always stood out in my mind as a characteristic. But again, I would urge you to take a few minutes and just kind of drill down here, because in addition to giving you notes and bullet points, there's also an example. This is Charles Schwab, and it's going back to 1999, but it's this is very typically how Bill O'Neill would mark up a chart. I've seen this many times, but it's very, very helpful. So just thought I'd sidebar that for a moment, that
Yes.
concept of a climax top.
If somebody wanted to get that from you, would you have an email that you would share?
Oh, absolutely, yes. Mary Ellen at the MEM Group.com, or just go to my website, meminvestmentresearch.com, and go to support, and we'll just shoot this right out to you.
Excellent. All right, I'm going to show a couple of examples. I'm sure you probably have one or two. We have time for at least one or two as far as how you might set a stop, or what happens when you do sometimes. I think Netflix is probably a good example right now. It is down 4 3/4. Again, these aren't really comfortable to endure, but you have to look at what is the damage that's actually being done. And right now, I don't see a whole lot of damage. So when I would be, if I were looking at this, I'll tell you, I did own Netflix, and I had put the trailing stop in right about here, because that was mid-August when, like I said, market looked like it was topping, but I didn't want to lose out on any upside. So what ended up happening is I got this big, nice move to the upside, right? But I had a trailing stop, and I had tightened it. So I came down to about here, and I ended up selling it. It got sold on that stop. And at first, I always hate when the stops click in, but you know,
And then it
hey,
goes higher.
and it goes higher, right? But I
Right,
was
right.
like, you know what? Yeah, it's landed on this support. You know what? I can always get back in if it
Mm-hmm.
comes down and tests that 20 or even the 50, which it looks like it could be ready to do. So anyway, if I were just getting in, if I were trying to take advantage here, obviously that's one of the important stop levels at like the 20-day EMA. But if you do the percentage here to get to there, that's only a 3.25% stop, which is you're going to get stopped out, no doubt, no doubt. So as we come down, here's obviously the strongest support area, but that's over 11.5%. So maybe not the best place, but that 50-day EMA is probably somewhere in here, and that's going to get you that 6.5, 7%, 8% stop. That'll just prevent, you know, any major losses if we're looking at a serious correction here, which, you know, we certainly could. We're overdue. But at the same time, we'll have to see what those indicators are showing. Because like you said, if we get some climactic readings coming out of today, well, that, you know, could easily be a selling exhaustion.
Yeah. And
So
I think we'll have to, at some point, look at the VIX, right?
yeah,
That,
absolutely.
that's on the agenda.
Well, we don't have very much time, but
Oh, okay, okay, okay.
but I can show you my climax chart, and this is how I was looking at. I really expected a down day today. We had, look at this, net advances declines. Look at how high that got to, and right here as well, the net advance decline volume, really big spikes. But we also were seeing fear still, which was what bothered me about all of this. So I saw that big move, looked like an island. So that's what I called last night. And my dad texted me. He's like, it was a buying exhaustion. I'm like, yes, it was.
Oh my gosh. So you high-fived each other through the,
Through our text messages,
there
yeah.
you go.
I'll see him tonight. We'll probably, of course, you know, calling a decline is while I feel great because I'm right, my portfolio, it certainly takes a little
Takes a
of the
beating.
shine off
Mm-hmm.
of being right. So you had an example
Oh, well, as far as of a
of
stock,
setting a stop, yeah, where you might,
sure.
for
Yes.
example, look at a stock right now, where if you were to get in.
Mm-hmm. Okay, I can share with you a stock that was on my MEM Edge report, and we did remove it as it deteriorated with the group. So this is Vertex, VRTX, a biotech name with earnings, and it had been a nice winner for us, but very similar to the earlier example, once the stock broke below this 50-day simple moving average, take a look at that volume, and then in line with a deteriorating negative RSI. And then we did have this early warning here with the MACD black line through the red. So once we break key support, big volume, MACD turns negative, RSI is negative, and we just simply remove it. And then as far as getting back in, it looked like it was firming up, but not until it breaks back above this 50 would we even consider. So we did not get head faked into that positive RSI and all of that. But yeah, so that would be an example.
All right, I'm going to show one that I was in. It's a great example, again, of the trailing stop and how to maybe protect yourself from a bigger correction or a decline. So I owned this one. It was just not doing much. I'd already kind of had it on my radar to get rid of back here. But I never really, I didn't, because we were staying positive. I'm more of an intermediate term trader. And I had set my stop level down here at like $16, which was pretty deep, but I will do a deeper stop on an intermediate term investment sometimes. But then again, like I said, I started to not like what was going on here with Bausch. So I set a stop, I think it was about 6%. And we had another spike just like this. And my stop traveled all the way up with me. And then right about here, I sold right at 22 because my trailing stop initiated. And again, it's like it's like having to walk away from the blackjack table when you're winning. I don't know about you, but that's how I feel when I have a stop hit. But I
Yeah.
was so grateful because after seeing it fail by the end of the day and close on its low, I already was, hey, island. I mean, everything was not looking good here.
Right,
Uh,
right.
so, so again, that was one of the ways
You
I had
walked
my
away a
stop
winner.
way down here. Yeah, I had it way down here when I bought, which I think was way back here. And so I'd set that stop. Like I said, I hadn't done much of anything. It was finally starting to make me some money. And then we got the spike. And at first I thought, oh no, I don't want to be out of it. But again, these are ways to protect yourself. But when I get in, I like to set that hard stop at a level that's pretty obvious as support, and then watch my profits and or losses. If I
Hmm.
lose, that stop will just trigger the hard stop. But
Sure.
I like those trailing stops when I got a nice profit and I'm not feeling good about the whole market in general. If I'm feeling
All
okay
right.
about the market, then hey,
A little more,
keep
a little
going.
more rope.
Yep. All
All
right. Well,
right.
let's move on into, yeah,
Yeah, that
that
happened.
happened. Tell me about your story today, Mary Ellen.
Oh my goodness, I was a little sad. Apparently, the markets, we are running low on pepperoni. It has everything to do with reduced help and as far as the manufacturing plants that provide us with the pork products. So America's favorite pizza topping is starting to get scarce, folks. So you may have to shift. Erin, I mentioned to you, I'm now plant-based, and I did try ordering a pizza recently. It was a cauliflower crust and non-dairy mozzarella. I mean, it was, I couldn't
Was
believe
it
it.
good?
It actually tasted good. Well, you load
Okay.
it up with vegetables and, you're on your way. But boy, I sure wouldn't, that, just thinking
Oh,
about pepperoni makes my
oh my
mouth water.
gosh. Yes, absolutely. So what do we have as far as
Yeah, let's
stocks?
take a look. We'll take a look at Domino's Pizza DPZ. This is a daily price chart. Had been a nice winter. Everyone is locked down at home and they're tired of cooking. So Domino's came through, their digital sales really increased, but we can see it is deteriorating here. That RSI turning negative. We're having that negative crossover on the MACD. We're going to see, can it hold support here at that 50-day simple moving average? Another pizza stock that we can take a look at, PZZA, Papa John's, now headed by Shaquille O'Neal, another big winner. It broke out of this nice 2-month base here back here in July, entered into an uptrend, but this is what I would consider broken. It's broken below that 50-day with negative indicators on heavy volume. So if you own that, you may want to consider trimming that one. And then Erin, if you want to show this one, or
Yes, I've
it's,
got Harmel,
there
right?
you
Or
go. That's our pepperoni producer, one of them.
yes, absolutely. So I pulled this one up, and unlike what we were looking at on pizza, we have the 50-day is holding up currently. So it's a big drop, obviously, but at least for consumer staples, food products, Hormel in particular, looking okay because we're holding that support. But things are not looking too good here. The RSI has gone negative, and of course, we had that sell signal come in on that first decline as it broke down below that 20-day EMA. So we
Hmm.
already had a caution flag out there, and
And
I'd
they
say
are
the caution flag is still waving.
right. I would agree with you. You do get a little bit of a yield here, 1.8%, but they are increasing pricing. So we're going to have to see how long they can get away with that due to this shortage.
Oh my goodness,
Yes.
yeah, you never know with how things are working with staples, if we're going to move things back into staples. But gosh, technology is getting hit pretty hard today.
Mm,
So
mm.
we'll have to see that rotation. Anyway, that really does wrap it up for us today. Glad you joined us for ChartWise Women, and I hope we helped you a little bit on how to exit the party when it's time. Happy trading.
Take care.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.